The broadcast is now starting. All attendees are in listen-only mode.
Hi everyone, thanks for joining us for this week's weekly Beginner Circle live video. If we could do a quick sound check and screen test, if you can see my screen, you should be seeing the SPX 60-minute chart and hear me, that would be great. All right, thank you. Okay, so this is Mike G. I'm senior analyst at LA Wave Trader and Seeking Alpha. I run the VIX service at LA Wave Trader. I mostly cover Nasdaq, Russell 2000, and the VXX, and the SPX, and I am here when Avi is out covering for him. Okay, so we're going to take a look at mostly the SPX chart today. We're going to spend most of our time on that. This is being the Beginner Circle weekly live video. We like to focus on this one particular chart for the most part and really dig into what we're seeing on this chart, how the fibs are lining up, how it's working with fib pinball, and really get into any questions that you may have on this one particular chart. I'm happy to go over some other charts if you have specific questions on those, beginners type questions on those, or you're not understanding something about the analysis. But prefer not to just do chart requests in this video. We've got a lot of other services that go over that for particular chart requests. So this is going to be focused mostly on beginners, and we're going to spend most of the time on the SPX chart, but I will review some other charts to kind of support what we're seeing on the SPX and explain how things are looking as far as the alignment with those other charts. Okay, so let's start by looking at the 60-minute chart. And I always like to start off the March lows, March of 2020 lows, because this was really kind of our last major starting point on the SPX. We saw a major bottom at that March low after the big sell-off that we saw that started in late January, early February, and we can see that sell-off came in the form of three waves. Now, the high that was struck back in February, we're counting that as a very large B wave that was expanded and actually exceeded the previous high. And so the move down into that low was 5 waves. So we have 1, 2, 3, 4, and 5 as part of a C wave of a larger wave, as part of a larger ABC down after getting an expanded move up off of the highs that were struck back in 20. Let me just pull that chart up also so we have it. Back in 2018. So this was a large expanded B wave. So we have A and then B, a very long and expanded B wave, and then we count the move down into the March lows as a 5-wave move as part of a C wave of 4. We can see that on the daily chart here on the SPX chart. So this was an A and then B and then 1, 2, 3, 4, 5 for a C wave for a wave 4. So we count that bottom as an ABC, and that move down here, this is that same 4th wave. And so off of that 4th wave bottom, what we're looking at is we're looking at a 5-wave move to the upside. So we've got 1, 2, 3, 4, and 5. And this 5-wave move followed our fib pinball guidelines very well. We have our wave 1 and then 2 where we lay out our initial fibs. We see that our wave 3 hit the 161.8 extension almost right on the nose. Our wave 4 retraced and stopped just over the 100 extension here at 29.13. And then our wave 5 hit the 238.2 extension, again, very close to hitting that right on the nose, which is this is a very close hit given how big this degree is, how large this degree is. We have a very close hit of the 238.2 extension. From there, we saw fairly shallow retrace, and this is where things got a little bit tricky in real time. Is we had a really shallow retrace here. We had a really sloppy pattern. We had an incomplete WXY pattern on a very shallow pattern, a very shallow retrace. So this in real time was a bit tricky, but because this move up off this low was so clean and followed our fib pinball guidelines so well, it really did suggest that this was a wave 2 bottom versus a wave 4 bottom. And this could have been counted as a wave 4 because it was so shallow. It only hit the 23.2 extension of this entire move up. But again, because this previous move was so clean as far as hitting our fib pinball guidelines, it counted much cleaner to count this as a wave 2 bottom versus a wave 4 bottom. So we were counting that as a wave 2. And so we have a full 5 up. So 1, 2, 3, 4, 5 into the September highs. And so from there, what we're looking at is we're looking at what the next move up is. So we count that as a 1, 2. Okay, and then from there we're looking at we have another 5-wave move up off of this low, 1, 2, 3, 4, and 5, which hit our 50% retrace, 50% extension of that initial wave 1. Then we saw another shallow retrace for a wave 2. And then we had another wave 1 here. And this move up is 1, 2, 3. And this is where we're currently sitting. So we're looking at a 1, 2, 1, 2. And then this is our third nested 1, 2. And currently sitting, it looks like we're in the midst of a wave 4 retracement, looking to pull back for that wave 4. That's what things are looking like right now based on today's action. Okay, so 1, 2, 1, 2. So still overall a very bullish pattern. Overall, still looking higher over the next several years based on our what we call a nested pattern here on the SPX. Okay, and so off of so we have 1, 2, 1, 2, and then off of this low that was struck back in March of 2021, this puts us in our current pattern, our current our current 5-wave move. What we're looking for here, we have 1, 2, and then we have 3, and we're looking for a 4th wave pullback. So this wave 3 was extended. It hit the 238.2 extension. We're looking for a pullback for this wave 4, and that pullback support is currently going to come in at the 4,200 to 4,095 zone. And then where we come up with that support is we're looking at a couple of different things. First of all, when we have a retracement for our wave 4, what we like to do is we put our fib retracement tool on the bottom of our wave 2, and we take it up to the top of the wave 3. And I'd like to line this up with our Elliott wave, with our fib extensions as well. So in this case, we've got our 38.2 and our 50% retrace. This actually support can be moved up just a hair. So we can move that support up to 42.46 and down to 40.95. That 40.95 would be a very deep retrace for this 4th wave, whereas the 42.46 level would be on the upper end of that retracement zone. So it would be A, B, and C for that 4th wave retracement. And again, it's the 38.2 to 50% retrace of this wave 3. And that also happens to line up with our fib extension tools. And we use that as well. And it comes in at the 161.8 to 100 extension of our wave 1. And when things are extended is when I really like to kind of pull out this retracement tool. And again, we line it up on the bottom of our wave 2, take it to the top of our potential wave 3, and we can kind of see where things fall. So in this case, again, 42.40, and the 50% comes in at 42.53. So we can extend that down a little bit lower at the 40.95 because we are so extended to the 100 extension. Okay, so that's the retracement zone that we're looking for if we are indeed topping it as a wave 3. Now, under this case where we're topping the wave 3, we should be seeing an ABC down. So it's unlikely that this is going to take a straight path to the downside. We're going to likely be, it's going to likely take a convoluted path, which is what most 4th waves do. So if we've indeed topped in this wave 3, we're going to likely see an A, B, C, down for the 4th wave, and again, supports at 42.57 down to 40.95. Exactly how we're going to get there is still a bit undetermined at the moment, but if we zoom in a bit, what we can see is that we currently have 3 down off the high. So we've got potential A, B, and then C. So we're right at the 100 extension right now. So this move here, we look at this, we pull our fib extension tool out again. We've got A, B, C. Again, we bottomed right at the 100 extension there at 43.81. So it's certainly possible that we see a bounce up here for an A wave and then another C wave down for a larger corrective move. Again, this could be all of the wave 4. It could be just another A, B, C of a larger degree. 4th waves can take many different paths. So these 4th waves and B waves are the 2 most unreliable wave structures that we deal with. So we just have to look for the ABC move to the downside, and then we watch where things fall on a larger degree support levels there for the 60-minute chart. So again, this is our ideal support zone for that wave 4. Okay. Okay, we've got some questions popping in, so let me look at these real quick before I get too far along and make sure we're not missing anything, and then we'll talk about some of the alternate paths here. Okay, Avi doesn't mention anything below 41.50. Okay, so 41.50 is the ideal support. So again, if we lay out our we lay out our fib retracement tool, we see that the 38.2 comes in at 42.30 and the 50% comes in right at 41.50. This is really ideally where it should hold, which is, again, the standard retrace for a wave 4 can be anywhere from 23.6 to 50% of wave 3. This particular case, the wave is very extended, and we also had a very shallow wave 2. So the wave, this wave 4 could get fairly deep. So because the wave is so extended, I would allow for it to get down to 40.95, although it would be less than ideal. So 41.50 is really the ideal spot to hold because it is a 50% retrace of the wave 3. So that is accurate in that that's the ideal lower end of the support level. We still could move a little bit lower than that and still be technically valid especially if it happened quickly. But I would prefer to see it hold 42.30 to 41.50. But it certainly could be valid below 41.50 as low as 40.95. Okay. What is the target for the A wave of the wave 4? Again, the target for the A wave of the wave 4 is, again, going to be very difficult to determine, but we are at the 100 extension right now. So we certainly could see a retracement from here for a wave B, and then another C down, and that could be the A wave. We still could be in the A wave. We really won't know until we see how things, until we see a move into support and a full 5-wave move up off that low. It's certainly possible that whatever this bottom is right here, that this is just a wave A of an A. So it could be A and then A, B, C for the A wave, and then another B and then a C down, or we could just see a direct path down for that. A could have already happened here, A, B, and then C, or A could bottom here and B, and then a sharp C down. So again, fourth waves can take a lot of different paths, and we really aren't going to know until we see some sort of support and some sort of a bottom form. But again, right now we are at the 100 extension of the initial move down. So this certainly is a spot where we could see some sort of a bounce here. But again, it could only be the A wave of a larger wave A. Unfortunately, that's how fourth waves tend to work. Why not count 5 waves up off the March lows as a leading diagonal into the June 2020 highs? Okay, let's look. Okay, so the question was, why not count 5 up off of the March 2020 lows as leading diagonal into the June of 2020 highs? So that would be March to June of 2020 to here. It's possible to count it that way. We would count that as 1 and then 2 and then 1. Again, doesn't line up as well for a fib pinball. And it would be counted as a non-overlapping 5-wave move. I can count this initial move up off the highs as a fairly clean 5-wave move. It counts better this way, and it fits our fib pinball guidelines much better. And again, because everything hit the fib pinball level so clearly and so precisely from the March low into the September highs, it just counts better as this entire structure being one 5-wave move. But it's a possible alternate count to count the wave 1 here and then the wave 2 there. It didn't fall through quite as nicely after that, under that scenario, but it's plausible to count it that way. If the principal alternation applies, how would you characterize their expectation for the wave 4? Would you expect it to be deeper, retrace since wave 2 is so shallow, or will the overall bullish environment continue to undermine sellers? That's a great question, and I was noting that the wave 2 of the same degree comes in here, and it was fairly shallow. So this wave 4 potentially could be sharp and deep. And again, we could see an A wave here and a B wave here, and a sharp C wave down, or we could just see the C wave just continue to move down sharply. But yes, I would characterize this wave 2 as fairly shallow and fairly flat. So this wave 4 could be fairly deep. In either case, just based on the size of this wave 2, this wave 4 should take some time. And this wave 2 was 2 weeks. So this wave 4 should be, if it happens quickly, it could be a week or 2 if it comes down sharply. But it should take some time before this is done if we've indeed topped in that wave 3. Would it drop to 40.10, fill the weekly gap, bring it to the alt structure? Drop to 40.10, 40.10. 4010 we still could be in. 4010 would be, that would be too low for the fourth wave. So under that scenario, we would be in a larger degree top. I'll get into those shortly. I just want to go over the primary count first. When we know that wave 4 is completed, it's a great question. It's always difficult to know for sure. But what we look for is we look for a move into support. And ideally, I like to see the action bounce off of one of the key fibs. So that's the first sign I look for. So I always look for the fourth wave to bounce off either 38.2 retrace or the 50% retrace, along with one of the extensions. And then from there, I'd want to see a full 5 up off of that low to give us further confirmation. That's the initial signal. We don't have confirmation, of course, until we break back over the previous high. But the signs that we'd look for is first a move into support and bounce off of support, ideally off, fairly directly off one of those fibs. And then from there, a 5-wave move up off of that low. That's how we get the first indication that we've bottomed at a fourth wave. How to determine if ABC is part of a larger A wave and not after the initial ABC down? Can't you also have a 5-wave A wave versus an impulsive wave 1? Okay, yes, to all of those things. So yes, you can have a 5-wave A wave. It's less common, but you can have a 5-wave A wave. And as far as how do we know if it's part of all of the ABC or part of another ABC, it's difficult to determine, but what we do look for is we look for structure and we look for size proportions. So in this particular case, we look at our wave 2 of the same degree. So our wave 2 and the wave 4 of the same degree should have fairly good proportions size-wise. The fourth waves could be fairly flat. They could extend, they could consolidate sideways if the second wave was fairly deep, but they should be proportionate in size. So in this particular case, we can see this fourth wave would be way too small to be completed already based on the size of this wave 2. It's just too small still. And that's why we still can count this as part of a wave 2 of one smaller degree here. I'll get into that in a minute. So that's the initial signal we would look for. So if we were to bounce right here, I would count this as an A and then B, and then I'd really want to see how deep the C wave is and how long this B wave took. And really, we could look at the proportions of this move based on the wave 2 to give us a better idea of whether we think this could be all of the wave 4 or just the wave A. Also, we do want to see a move ideally into support. And again, that support comes into 42.30. So if we stopped well short of that support, it would also be an indication that that may not be it. And then we also look for the move up off of this A wave. So if this A wave, if we got a clear 3-wave move up off the A wave, it's likely suggestive that we're going to see another B wave and then it's another C down. If we saw a really clear 5-wave move to the upside followed by a corrective retrace, then it would set up a move at least for a C wave to the upside where we could play the C wave of the B wave and potentially have a bottom in all of the wave 4. So the structure off of the bounce after we get the bottom is really key. So if we get 5 up, it opens the door to that being the completed pattern of the entire move. But if we get a clear 3-wave move up off that low, it's more suggestive that we're going to see a B wave top. Okay, do I understand correctly? We are in 4 ABC down, 42.56 to 40.10, A support at 43.81 and bounce to 4400. Okay, that's a lot to digest. Let me look at, I think we're going to look at multiple time frames. So the primary count is that we've topped in the wave 3 here, and that's based on today's action. Where exactly we are within that fourth wave is a little bit hard to determine at the moment. We just need to see where this first initial move bottoms. So again, if we bottom around here, which is this second move down here, and zooming in it, we can see it a little bit more clearly. So right now we're right at the 100 extension. This is an initial move down off the high. So we've got A, B, and then C. If we bounce right here and get a corrective move up, that's a B wave. That opens the door to seeing another C wave down. Now, whether that's all of the wave A, if it's just part of the wave, if it's all the wave 4, whether it's just part of the wave A, whether we're going to see a really sharp and deep C wave down, it's really unknown at this point in time. We just, for short term, we need to see what the structure looks like and where we bounce. Okay, that's the key. And right now we're at a fairly key support level. The 100 extension of this initial move down is fairly key. We're also right at the 88.6 retracement of this move up off of the 43.64 low. So that brings us to the alternate count. So again, the primary count is that we've topped in the wave 3. Now that said, we haven't invalidated the count that more immediately bullish. Okay, and the more immediately bullish path, as we're watching on the SPX chart, still has the top of the wave 3 up here closer to 4,600. Okay, so we still can follow this path. And under that particular path, what we'd be bottoming in here is bottoming in a wave 2. And again, because we've got an ABC down, we can see that we are right at the 100 extension. We're below the 76.4 and just over the 80.6 retrace. So it's deep. It's deeper than we would like to see for a wave 2, but it's still valid because we haven't broken back below the previous low at 43.64. So this 1-2 up is still valid under the alternate path. Okay. So again, primary count, we've topped the wave 3. You'd be looking for an A, B, a C down, or even if we just continue to move down deeper in the A wave, B, A, B, C down. Either way, we should see a bounce for a B wave at some point and then a larger C down. Whether A wave bottoms right here, whether it moves lower and gets a B wave, we should see it A, B, C down before finding a bottom in the green primary count. If we see a fairly strong 5-wave move up off of this current level, if we hold the low that was struck today, we see a fairly strong 5-wave move up, and we are able to push higher, ideally up towards 44.50-ish, get a corrective retrace, okay, would open the door. It would open the door for this to have already bottomed this wave 2 under the yellow count. Okay, and under that path, we have a 1-2 up off of the lows that were struck back here in July. So it'd be 1-2, and then we'd be looking at 1-2. So 1-2, 1-2. That second wave 1 hit the 61.8 extension fairly closely, and we have an ABC down to the 100 extension. So we can get a full 5 up off this low and then break back up over the 44.50 and then over the 44.75 level. It opens the door to this our bottom in a more bullish wave 1-2. Okay, that would target the 46.32 to 4,700-ish area for the more immediate targets, and that's based on where this wave 1 extension is. So it'd be 1-2 when we look at our fibs based on that 1-2. Okay, so that's what we're looking at if we find a bottom. If we can hold the lows that were struck today, basically the low at 43.81. So if we can hold 43.81, get a full 5 up off that low, and then break over 44.50 and then over 44.75, it opens the door for this yellow count to be in place. Break under the 43.81 low, becomes much less likely, and then if we're under 43.64, we're for the most part confirmed in the wave 4. And at that point, we just have to watch our more complex ABC structure to the downside, and we look for a move down towards a 42.30-ish to 41.50-ish for the bottoming zone for this wave 4. Okay, so that's what we're looking at on the alternate count under the yellow path, the more immediately bullish path. Okay, I don't know whether all 3 count is valid. Again, I just discussed all that, so hopefully that answered that question. So 44.50 would be confirmation that a bottom is in place, and a little bit before that. We would need 2 things. We would need a move over, an initial move over 44.50 and a 5-wave move. If we get over 44.50 on 3 waves, this could still simply just be a B wave. Okay. And the reason why I use 44.50 is because this is the invalidation point of this being an impulse down. So it doesn't automatically mean we're pushing higher, but it opens the door to that case. It makes it more probable that we're going to see a move higher. But I still would need to see 5 up. If we got A, B, C over 44.50, we could just be a B wave here and push down. We need 5 up. So 1, 2, 3, 4, 5 for wave 1, and then A, B, C for 2, and then we can push higher. So over 44.50 by itself is not enough. We need 5. We need the structure as well as price. So 5 up and a move over 44.50, and then a move over 44.75. That's what we're looking for. And there's really nothing before that, because again, we could see a corrective B wave retrace that pushes back up towards this 44.75 high and still be a B wave. It really is more about structure at this point, what the structure looks like to the upside to help give us an idea of whether we've bottomed in this alternate yellow count or whether we're going to see just a corrective B wave followed by another strong C down. The green bounce B can also be 5 waves, so yellow can be the B wave is always corrective in nature. It's always 3 waves. Could be a WXY, could be an ABC, but a B wave is not 5 waves. B waves need to be 3 waves. So if we see it clear 5 up, then it would be an indication that we should be pressing higher after the 5 up. ES bounce from 4381, could that be the bottom, or it has to be done during NY time? It does not have to be done during regular time hours. It's always ideal for the SPX to be able to at least find a bottom near the region that the ES does. It always complicates things a bit when we see large gaps overnight on the SPX and the ES chart, especially when there's incomplete patterns. In this particular case, let me see where the SPX closed and see if that potentially is an issue. Not particularly. I think we could. Yeah, we're certainly deep enough to where. Yeah, we're right at the 76.4, so it could potentially find a bottom right there and push higher. It's not. It'd be count as a WXY, where this second wave here is not a full 5 down, which is less than ideal, but it's certainly deep enough at the 76.4 that could have been the bottom of the more bullish path. It's certainly valid, but it's not the ideal structure into the low. So it wouldn't look unusual for this to gap up, and then that would be our wave 1 here, right off the 76.4 retrace. But the ES did certainly get deeper than that. So if you want to trade for the deeper pullback, would the logical step be today's high or Monday's high? Not following exactly the question. Which is a lot of, if you wanted to pull, this is the question. So you're talking about a short trade. Again, fourth waves are very difficult to trade, especially when you only have a 3-wave start move, initial move. It's always more reliable to trade off of a 5-wave move. So if you have 5 up or 5 down, and then you trade the corrective retrace, right now we only have 3 down. So any corrective move to the upside could certainly morph into a more bullish pattern after getting corrective move down. But the setup would be, if you get an ABC, just speaking in general terms, the setup is always going to be, invalidation is always going to be at the previous high if you're looking for a short trade. So it would be ABC, and then you look for ABC. After a flat structure, which is what we have here, flat corrective structure, typically the B waves retracements can get fairly deep. So they can get up to 76.4, even as high as 88.6 retracement, or even exceed the previous high and still be valid. So after flat structure, the retracements, again, can be fairly deep. When you have a 5-wave structure, the retracements typically are more shallow, 38.2 to 61.8. But a flat corrective wave structure, you're looking at typically deeper retracements. So if you are going to attempt to trade a flat corrective wave structure, you ideally would want to wait for that to retrace more deeply down towards 76.4, 61.8, and then put your stop below the previous either top or bottom. But again, ABC is a much less reliable pattern to trade. And then the other issue is, even if you move up higher off of that level, you don't really have great fit pinball guidelines to help kind of guide you out of the exits of that trade because corrective wave structures don't follow fit pinball very well at all. So you're looking at exiting, the 100 extension or the 123 or the 138.2 extension, which doesn't give you the best risk to reward versus an impulsive structure, which you're looking at exits closer to the 161.8 to 200 extension. So you get better risk to reward on an impulsive wave structure. Doesn't the theory of alternation apply for this fourth and second wave was so clean? We did talk about that. Yes. So this fourth wave could be fairly sharp because this wave 2 was fairly shallow. What if it gaps down tomorrow? Is the wave A then considered incomplete, or would the new target be that case? If it gaps down tomorrow, I would count this still as one single wave structure. So I'd count this as part of either the A wave, or it could be all of the wave 4 if it goes all the way down. But I would count this as one single wave structure if it gaps down tomorrow. Okay, any other? Okay, so let me just talk about the other alternate account I'm watching on the SPX, and then we can finalize our SPX questions. And I'm going to quickly go over what I'm watching on the Russell 2000 and the Nasdaq from there. Okay. Is it possible to count a micro 5 down from the morning's high on the SPX or ES? Let's see. From the morning high, it's on ES, not cleanly. So, especially not on the SPX, it doesn't count as a full 5 down. So, again, to bottom here, we'd likely have to have bottomed in a WXY versus an ABC. So it'd be A, B, and then we don't have a complete C wave. So likely we would count, if we bottomed here, if we moved up, it would likely count as a WX and then ABC for a Y wave. So less than ideal for sure. Okay, so the other path that I am watching on the SPX, which it's on my radar. It's hard to count it as a highly reliable path, but it's something I'm watching. Would be that we're dealing with a series of nested 1-2s off the lows, off the Mark's lows. So we have that 1-2 here and then a 1-2 here. And then I can make the case that we have a full 5 up here, 1, 2, 3, 4, 5, counting this as a wave 1 of a larger nested pattern. In that case, we'd see a deeper pullback A, B, C, deeper retrace towards 40.95 to, let me pull those out here. 41.57 to 39.84 is where that falls now. So that's the other path I'm watching. And the reason I'm watching the path, I think it fits better with what I'm watching on the Nasdaq in a possible 1-2, 1-2 up. So it's just another path that I'm watching. It'd be very similar to what we're watching this fourth wave, although the big difference would be that it would be ultimately be more bullish over the next several months, because we'd be dealing with a nested 1-2, 1-2, 1-2 off the lows. The retrace would be a bit deeper in this red count, but the end result would be a much more overall bullish pattern, because we'd be starting in the heart of a 3 of a 3 of a 3. So what I would expect from there, if we were following that red path, is just basically a grind up higher for several years with very, very shallow retraces. So that would be what I would expect. So if we start to get kind of a deep retrace here, I'll be on the lookout for this, because that probably would be it would be a good opportunity to add to positions, and it would be difficult probably to get in after that. Any major positioning on the SPX, just because it would likely be a fairly sharp grind up. But there's certainly some risk in that, because we would be below our fourth wave support at that point. But that is an alternate path that I'm watching. And again, that fits better with what I'm watching on the Nasdaq. I've been posting that chart in the room. You can see that here. So this Nasdaq chart, I've got us in a 1-2, 1-2. So it's not 1-2, 1-2, 1-2, but a 1-2, 1-2 on the Nasdaq. And ideally, I'd like to see this push higher to finish off this wave 1 up towards 17,000-ish. But I can make the case we've already found the bottom here in this wave, this green wave 1 here. So I'd be looking for, what I've got is a 1-2, and then 1, 2, 3, 4, 5. Then I'd be looking for A, B, C for a wave 2, back down towards 12,000-ish before seeing a much, again, stronger and sustained wave 3 of 3 up to the upside here. But I would prefer to see a push higher before topping that wave 1. But I can make the case that we have enough waves in place for the green count. I've been showing that in this wave 1 here, but just this action is a fairly typical sideways consolidation that typically resolves higher. But if it doesn't, and we start breaking down below 14,500-ish, it's going to open the door to this. Are we topping that wave 1, that green wave 1, and then getting a corrective retrace to the wave 2? So that's why I have that red count on my SPX chart, because I think it fits fairly well with the Nasdaq chart. And the other thing I want to point out is the Russell 2000, which is the other main chart that I'm watching. And this chart's also at a fairly important crossroads here. But I do want to talk about the bigger picture on this for a minute, and then we can get into the details here. So this chart was ahead of the SPX and the Nasdaq for quite some time. So we saw some kind of consolidation in here where this was banging its head here, before really breaking out. So this is what the way I'm counting this, this as a wave 1, 2, and this is a leading diagonal 1, 2, 3, 4, 5. Then another wave 1, and then a 2, and then another wave 1, and then a wave 2. So we have a series of 3, 1, 2, 1, 2, 1, 2. Again, very similar to what that potential red count I'm watching on the SPX, where we've got 1, 2, 1, 2, 1, 2. So a series of nested wave 1s, 3 nested wave 1s on the SPX. And then actually we saw on the Russell a 4th one, so 1, 2 again. So this really banged its head up against this resistance over here for quite some time, several months before it really broke out. And then once it broke out over the 1645 level, which was the top of this 4th nested wave 1, we just saw a really strong climb higher in the Russell 2000. It saw very shallow retracements. It's very difficult to buy on any weakness because there just really wasn't any weakness during this time. And we saw a really strong wave 3. And after that topped right at the 200 extension here, we can see that 1, 2, and then 3, right? And this is wave 3 of 3. So right at the 200 extension, a very extended wave 3 of 3. From there, we've just seen consolidation. It's been months of consolidation, all the way since March of 2021. So several months of consolidation. We've got either A, B, and C down, or W, X, Y. We've already bottomed, but it's just sideways consolidation near the highs. The key takeaway I have on this chart is that the pattern is incomplete. Okay, so this is not a 5-wave structure off the March of 2020 lows. It's only 3 waves. It's clearly 3 waves. So what that tells us is that it's very likely that this needs at least one more higher high and probably 2 more higher highs, okay, to finish off the larger degree pattern. Okay, so I've got, again, 1, 2, and then 3 up here. So I still have this in wave 4, and then still needing another high for a wave 3. The big question I have is where are we within this 4th wave? And again, 4th waves are very difficult to chart. They're very unreliable. But right now we're over support. So again, our support zone is 2061 to 1937, and that's the support. So as long as we're over that support, we still should get at least one more higher high, and likely 2 more higher highs here for wave 4. So I've got 3, 4, and then 5. So 5th up to around 3,000. Those are my ultimate targets on the Russell 2000. Okay. And the other kind of key takeaway on this that we can look at is our 4th wave. We saw our wave 2 of the same degree. This is our 4th wave. Our wave 2 of the same degree was fairly sharp. So we see this was a fairly fast and quick wave 2. And look at our wave 4. It's sideways, and it's long and sideways and flat, very flat structure. So this is fitting with our theory of alternation for this wave 2 of the same degree. Okay. So that's what I'm watching on Russell. And so again, the key takeaway is that it's an incomplete pattern. We should see another higher high. Our support zone is fairly clearly laid out, 2061 to 1937. I would prefer to see it hold this white count 1, 2, 3, 4, 5. I think it counts better, a cleaner path. But if we start breaking down in the other equity markets, I think it's likely we're going to see it as deeper push lower into the deeper part of the support zone for this wave 4. At that point, we just watch that 2061 and 1937, and then look for a 5-wave move up to set up the final push for that wave 3 into this 2522 to 2968 zone for the target zone of the wave 3. And the other thing I want to note is once we get into that wave 3, we likely are going to see a larger 4th wave, so ABC for a 4th wave, which likely takes us right back down to about where we're trading now. So from a personal perspective, I'm likely going to exit most of my Russell 2000 based positions once we get another higher high, and I'll probably sit the rest of this move out, and I'll look for other opportunities in other markets. If we do get a fairly clean ABC down for this 4th wave, I may look to re-enter it one more time, but I think this is getting to the end of its life of easy part of the trades. So again, another higher high on the Russell 2000. I'm going to likely be looking to park that money elsewhere. Okay. Question back on the SPX. let's do first. Russell 2000, is your wave 3 a minor wave or a minute? For the nomenclature here, it's, I mean, it's not. It is a minor on this nomenclature, but I'm not overly stringent on my nomenclature. So to be honest with you, it's one of I'm not overly stringent on that. So I'm really looking at the move off of that low there. That wave 4, 5 looking like 3 waves. Which wave 5? In the Russell 2000? We don't have this one here, this wave 5. 1, 2, 3, 4, 5. We don't have 5 up yet. That's the one you're referencing. I'm not sure which wave 5. Okay, let's go back to the SPX on that question. You can, you want to chime back in on that which wave 5. I can get back to that. All right, so back to the SPX. Either way, we have a balance either from the current 43.92 or 43.64 and a balance up to 4,400, and it's a structure bounces across 45 feet away with it. Okay. So questions about the bounces. Not either way. Ideally, I'd like to see a bounce here because we're at the 100 extension, but we don't have to bounce here. We can continue to move directly lower. If we bounce here and we get 5 up, 1, 2, 3, 4, 5, and we cross 44.50. What that does is it confirms that we have 3 down, okay? So A, B, C. So if we pass this 44.50, gives us confirmation that this was indeed a 3-wave move. If we hold under that 44.50, let's say we just stop right here, this could then be a more bearish, immediately bearish 1, 2, 1, 2, nested, and then 3 down. It's less likely because it hit the 100 extension, but it's certainly possible, especially in bearish environments. We can see extended C waves. So that's why this 44.50 is important, because pushing over that 44.50 confirms that this is a corrective ABC down. Until we break that 44.50, which was the top of the B wave, this is A, B, C, until we break back over the top of the B wave, we can't confirm this is 3 down. Okay. So again, to give the initial signal at the bottom of this yellow count, we'd want 1, 2, 3, 4, 5, and a break at 44.50, and then we could look to buy after a corrective retrace. Okay. But not either way. We could just continue to move straight lower. If we continue to push lower and break under the previous low here, that opens the door to seeing a direct move down to 34.50 to 43.19, which is the 161.8 to 200 extension. It's not uncommon for that to happen in bearish markets. Okay, sorry, I meant rut 5 before top in March. We're talking about back here, the March. All right, so yeah, that was 3 waves. That's because it's a B wave. So just like the other indexes, we count that as the A, and then B, and then C. This one didn't exceed the previous high though, so this is a more clean 5-wave move. So we got 3 here, and then A, B, C down for the 4th wave. The Russell did not exceed the previous highs. The SPX, the Dow, and the Nasdaq all did. Okay. All right, any other questions, folks? I'll go over the VXX wall. I'm waiting to see if there's anything else popping in. I will be discussing the bonus EM opportunity posed by Avi. No, not really in the scope of this beginner's presentation. Avi can go over that a little bit more detail in his videos, but this is more, again, geared towards beginners. Why have projections for GX shifted more negative lately? Because it's broken support. Is the main reason. It's broken down below ideal support. The ideal support on the GDX, for this wave 1, 2 would have really been to hold the 76.4 retracement level here, and that didn't happen. We started to move below it. So with that being the case, we have to allow for a more bearish stance. So where we'd have 1 and then 2, the break of that 76.4 at 32.44, open the door for this being much more bearish in the intermediate term. Ideally, it's very rare for wave twos to break below the 76.4. Still technically valid as long as we're over the 30 level, 30.24. But we really would need to see a strong bounce really soon on 5 waves to make that case be somewhat probable. But the break of the 76.4 really opened the door to this being a more bearish 1-2 down for this part of the C wave. So I've got A and then D, and then this would be a 1-2 down for C wave, or even a 1-2 down for the C wave of the larger two. I will. Okay, if red is already bottomed in 2, but ES is always go down in 4. I don't think it's going to happen that way. I think the red is bottoming in 2. I think the ES is also bottoming the alternate 2. Also, I doubt that they would be that divergent. Possible, but I doubt it. How do you think about protection? Would you layer in protection with B-wave bounce, comparison with spot, or a fourth or 2 difficult deals? So it really depends on what you're trying to accomplish and what your time frames are. It's a very difficult question, and it really just depends on what your time frames are, what you're looking at, what positions you're in. It's tough. Fourth waves are very difficult to trade, and it's hard to trade them effectively to the downside. Unless you have a clear setup, but trading ABCs to the downside is tough. So, but the answer to that question is it just depends on what your personal portfolio looks like, what your time frames are. There's just a lot of questions that go into that to answering that question. TLT. Do you have a specific question on the TLT? It's not being explained in the analysis. Do you expect upcoming? How much do you expect the upcoming wave 4 of one larger degree on the rut to take longer than the current wave 4 or lesser degree than the current let me see. I think the wave 4 could be fairly okay. So again, back to our alternation theory. Our wave 2 was sharp here. Our wave 2 is sharp here. Our wave 2 is flat here. So this wave 1, 2, 3, 4. This wave 4 was small. This wave 4 was flat. This wave 4, because this was sharp, I would also expect to be flat. And this would buy time. I think this was buy time for the other indexes to catch up while the red is kind of consulting. So I would expect this fourth wave to be long and flat. Any stocks can be asked in the stock wave video. Okay, let me quickly look at the VXX, and then I'm not following what the question is on the TLT, but if you want to get more specific, I can try to take a look. And who posted the chart? If you're referencing a specific chart, I can look at that chart too. I don't know whose chart you're referencing. Okay, so quickly at the VXX, so the way I'm counting this in a very large diagonal down off of last summer's highs. I've got this currently topped in a fourth wave here. It's still possible we're in a 1-2 down, but it's getting less likely here with this move up. So this could be a 1-2 and then 1-2, similar to what we're seeing on the SPX and the Russell. But if we break too much over the high that was struck at the end of the day, I think it's getting more likely. We've already bottomed at all this wave A here. At that point, we're looking for an A, B, and C up for a larger wave B. So again, it's fitting what we're seeing on the SPX and the Nasdaq. We actually put a trade on in the VIX room yesterday here after this is a fairly clean 5 up right here. So we put a trade on the VIX room yesterday via options and shares. So we had 1, 2, we had a nice 5 up, a nice move into support, and we traded this move here. This move down here is corrective. We had A, B, C up, clearly corrective, but the B wave into support. And then we have a C wave up. So the 29.97 level is fairly fairly important on the VXX. If we can hold that level and push lower, that would indicate that we may have topped at a C wave there. What is the deepest extension of the A wave possible? A wave, the C wave of the A wave can extend to 161.8. 200 extension is not uncommon, especially in bearish markets. RSP, it's really outside of the scope of this presentation. So we really want to try to keep it focused to some of the charts that we're working up here. TLT, okay, so let me quickly look at the TLT. Do you have, is there a particular count, someone that you're watching, someone's count I can answer a more specific question on? TLT chart. I don't have my TLT chart. Let me see. Okay, so TLT off of this low here could be 5 up off this low, off of 145.60. This could certainly be 5. 1, 2, 3, 4, 5, and this is clearly corrective. So yeah, I could count 5 up off of that low, but this may get deeper, a deeper retrace here for a C wave because it's fairly shallow still, if that's the question. Okay. All right, so that looks like it for the questions. So we'll go ahead and end things there. Again, if you have, I don't have Dow worked up right now. And if there's a specific question about something, that's fine. But we like to try to, I like to try to keep these more about specific questions about a particular account. If there's a count that you have a question about, I'm happy to look at it. But more of a beginner type presentation where we want to look at specific questions. TLT longer term off the April low. I don't see 5 up off of the April low. How does one layer long position during fourth wave for longs? Yeah, I don't see 5 up for the March low. That's a question on TLT. It looks like 3 to me. How does one layer long positions during a fourth wave low? Let me go back to the SPX chart. Actually, let's look at the TLT. Fourth waves are difficult to trade out of. What I like to do is I like to look for bounces right off support. So I like to look for things to bounce. So like this is a good example here. This TLT bounced right off of this key support level here. And you look for 5 up, and then you can trade that 5 up and try to be nimble in that level. But I like to look for bounces right off key supports and then 5 wave moves up off of key support. That's ideal. And then if you want to add to that, you could always, for example, if you get a bounce off this move, you could, and then 5 up, you can add a bit here and then hold some more. And then if it gets another lower, deeper into support, you can look for another bounce off of another support level here. But ideally, you'd want to see 5 up off of the support level. But again, fourth waves are difficult to trade out of. But I do like to look for, anytime you see a bounce off of a key fib, like when I say bounce off of, I mean fairly close to that number. And also it can be, you have confluence with the move to the downside. So if you get a bounce off of a support to the upside and then a bounce off of, say, the 100 extension to the downside, that always helps give further confidence. And then from there, you'd like to see a 5 wave move up to give a signal on the bottom. All right, so we'll go ahead and end things there, folks. If there's any other questions, please feel free to ask in the room during the week. Myself, Jason, or one of the other guys are always happy to answer those questions there. If I don't see a question in the beginner circle, feel free to respond to one of my posts. I typically will see those more often. So if you see an update from me, go ahead and respond to that, and I will do my best to respond to any questions any other further questions. So thank you all for joining us. Have a great rest of your week. And I will be back in, I think, 2 or 3 weeks. I think you guys have Garrett next week. So, all right. Thanks, everyone. Have a great rest of your week.